This is Trade-a-Live with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Welcome, listeners, to another enriching episode of the IUX podcast, a part of Trade-a-Live brought to you by IUX Education. Here we explore the fascinating dynamics of market observation and personal development. Before we begin our charting analysis today, please note this important regulatory warning. Trading Forex and contracts for difference, or CFDs, involves a high level of risk and is speculative in nature. Trading with leverage can result in losing your money rapidly. In fact, 76% of retail investors' accounts lose money when trading CFDs with this provider. You should carefully consider whether you understand how CFDs work, whether you can afford the high risk of losing your money, and whether leverage trading matches your financial objectives. Please note that the discussions in this episode are for general educational and informational purposes only and do not constitute personalized investment, financial, or direct trading advice. Now, let us return to today's episode where we can help you explore the lives, lessons, and legacies of accomplished historical traders. Today, we are focusing our attention on a tool that is often overlooked but is absolutely fundamental for long-term growth. We are going to discuss the profound practice of documenting our market interactions. In any discipline that requires continuous development and skill refinement, the ability to track and review one's progress is a fundamental component of the learning process. Whether in professional sports, corporate management, or financial market analysis, relying solely on memory to evaluate past actions often leads to an incomplete or biased perspective. Let us visualize this concept for a moment. Imagine a world-class athlete, perhaps an Olympic gymnast or a marathon runner. They do not merely perform their routine and they visually try to remember how it went. They record every single detail. They analyze the video footage, they track their nutritional intake, they document their sleep patterns, and they measure their heart rate. They do this because they understand that human body is incredibly malleable. It's easily swayed by how we feel in the moment. If an athlete relies only on how they felt during performance, they might overlook a minor mechanical adjustment that could elevate their entire routine. This is exactly where the concept of journaling becomes highly relevant for market observers. Similar to how a well-structured enterprise tracks its operations, a journal serves as a personalized database for an analyst, capturing the rationale, the environment, and the mechanics of historical market interactions. Understanding why tracking progress is essential provides individuals with a structured framework for long-term educational development. When we observe the financial markets, we are processing vast amounts of data. We are looking at price action, volume, macroeconomic news, and structural trends. The primary objective of maintaining a record is to transition from subjective recollection to objective data analysis. Human memory naturally prioritizes recent or highly emotional events, which can skew one's perception of overall performance. For example, if a market participant observes a sequence of structural events that perfectly aligns with their analysis, the brain naturally releases dopamine. It feels highly rewarding. Conversely, if the market behaves in an unexpected manner, the brain might experience an unhelpful emotional response. If we do not document these occurrences, our memory will only recall the highlighted emotional peaks, completely ignoring the valuable, quiet data found in standard daily observations. By documenting market interactions, individuals create a factual archive of their analytical process. This archive becomes an invaluable educational tool, allowing for a neutral review of what strategies align best with their personal style. It helps observers identify their unique analytical framework, the specific market conditions where their understanding is most applicable, and assists in recognizing recurring behavioral patterns so that unhelpful habits can be acknowledged and adjusted over time. Think of your journal as a mirror that reflects your cognitive processes back to you without judgment. It simply shows you the facts of your past observations. This is deeply important because approaching market analysis requires a high level of self-awareness and emotional discipline. The act of writing down the reasons behind a specific market decision fosters a sense of accountability and mindfulness. When you pause to articulate your thoughts onto paper or a digital screen, you are actively slowing your brain's processing speed. You are moving away from impulsive reactions and stepping into the realm of deliberate reasoning. It shifts the focus away from merely looking at the immediate outcome of a transaction, encouraging a deeper examination of the personal decision-making process itself. This educational pursuit equips individuals with the clarity needed to make independent, well-rounded decisions based on historical self-generated data. Ultimately, the introduction to journaling is an invitation to treat market observation as structured, professional endeavor where continuous learning and data-driven refinement are the primary objectives. It is about building a comprehensive database of your own mind, ensuring that every observation, every hypothesis, and every outcome becomes a permanent stepping stone in your lifelong educational journey. Now that we have established the philosophical foundation of why we document our experiences, we must explore the practical application. How do we build this database? What goes into it? To fully integrate journaling into daily routine, it is necessary to explore the specific components that make a journal effective. Recording data goes beyond merely noting numerical points. It involves capturing a comprehensive picture of the market environment and the analyst's mindset at that specific moment. This comprehensive approach is what transforms a single logbook into a powerful tool for self-discovery and methodological improvement. When exploring the best trading journal template for beginners, the focus should always be on simplicity, consistency, and comprehensiveness. A well-structured template typically includes quantitative data, qualitative observations, and visual records. Let us break down each of these essential pillars in detail. So, quantitative data and categorization. This section involves factual numbers of the market interaction. It is the raw, undeniable math of your observation. It should include the date and time, the specific financial instrument being observed, the time frame analyzed, the entry and expected exit levels, and the position size relative to the overall portfolio. But quantitative data is more than just a list of numbers. It's about organization. Additionally, assigning specific tags or categories, for example, tagging the specific strategy used or the market condition, is highly beneficial as it allows for efficient filtering and data sorting during the review process. Imagine you're categorizing books in the library. If you just throw them on a shelf, finding a specific topic later becomes an arduous task. By tagging your observations, perhaps noting whether the market was in a consolidation phase or an expansion phase, you create a highly searchable database. You can later ask your journal, how well do I understand the market when it's expanding? And the data will provide a clear, objective answer based on what your past records. Qualitative data. While numbers tell you what happened, the qualitative section tells you why it happened. This is arguably the most crucial component for educational growth. The qualitative section of a structured trading journal template includes the rationale behind the decision. In this section, you must articulate your hypothesis clearly. Why was this specific market structure chosen? What macroeconomic data or technical indicators supported this view? Did you observe a specific volume anomaly? Was there a shift in market structure on a higher time frame that influenced your lower time frame perspective? Writing this out forces you to validate your own logic. Furthermore, it should include a space for emotional tracking. Noting down one's mental state, whether feeling patient, focused, or distracted, provides incredible insights into how psychology influences analytical objectivity. We are human beings, not algorithms. Our cognitive function fluctuates based on numerous variables, how much sleep we had, or external stress levels, and our overall physical well-being. By ranking your mental clarity on a scale of 1 to 10 before making an observation, you might uncover fascinating correlations. You might discover that your most accurate structural readings occur when your focus level is at an 8 or higher, while observations made when you feel hurried or distracted often lead to unhelpful habits. And now visual records. Words and numbers are powerful, but the human brain processes visual information with extraordinary efficiency, including screenshots of the charts at the moment the decision was made and subsequently after the market event has concluded, adds immense value. Visual data provides an immediate context of the structural setup that numerical data alone cannot capture, making future reviews much more intuitive. When you take a screenshot of your initial observation, you freeze that moment in time. You capture the exact alignment of the candles, the specific angle of your trend lines, and the precise boundaries of your support and resistance zones. Later, when you capture the after screenshot, you can lay them side by side. The visual comparison is a masterclass in market dynamics. It allows you to see how the market interacted with your structural boundaries, providing immediate visual feedback on your analytical accuracy. The process of reviewing this gathered information is where the true educational value emerges. Data collection is only the first half of the equation. Data synthesis is where the growth happens. By dedicating time at the end of a week or month to review the journal, individuals can identify recurring patterns in their own behavior. This review process should be treated as an essential educational part. It's a time for quiet reflection and objective curiosity. By utilizing the tags they created, observers can filter their archive to see how specific analytical approaches perform under varying conditions. For instance, the data might reveal the market interactions based on higher time frames align more smoothly with their analytical style compared to short-term observations. You might find that your understanding of the daily charts is exceptionally clear, while the lower time frames presents more cognitive friction. This is invaluable self-knowledge. This level of detailed tracking assists in identifying areas of strength that can be refined and areas requiring further study. It provides a feedback loop that relies on empirical evidence generated by the individual. Your personalized database serves as a guide, helping you evaluate your own progress with factual data. Moreover, utilizing a structured trading journal template ensures that the data collection process remains organized. Today, observers have various mediums to choose from, ranging from manual digital spreadsheet to specialized software applications that offer automated data syncing, visual chart storage, and advanced metric tracking. Regardless of the chosen medium, it should facilitate easy review. Whether you prefer the tactile experience of typing into beautifully formatted document or the automated efficiency of specialized software, the tool must serve your educational goals. The ultimate goal is to cultivate a habit of conscious participations in the financial markets, where everyday decision is documented, reviewed, and utilized as a stepping stone for continuous educational advancement. Over time, the act of journaling becomes second nature. It transforms from a required task into an indispensable companion on your journey of market exploration. As we bring this comprehensive exploration of market documentation to a close, let us synthesize the core philosophies we have discussed. The journey of understanding the financial markets is not the destination. It is a continuous, evolving process of self-discovery and analytical refinement. In summary, maintaining a structured journal is a valuable practice that bridges the gap between theoretical knowledge and practical application, acting as a personalized database that transitions analysis from subjective memory to objective data analysis. We have seen how our natural cognitive biases can blur our perception, causing us to remember the emotional peaks while forgetting the quiet, instructional data. A journal acts as a steadfast anchor to reality, presenting the facts precisely as they occurred. To be truly effective, a comprehensive journal should integrate quantitative data with categorization tags, qualitative insights such as market rationale and emotional tracking, and visual records like chart screenshots. By weaving these elements together, you create a multi-dimensional view of your market interactions. You are no longer just looking at numbers on a screen, you're evaluating your own psychological states, your strategic logic, and your structural mapping simultaneously. By diligently recording these variables, individual constructs an objective mirror that reveals recurring behavioral patterns, cognitive processes, and their unique analytical framework. This framework is not a secret formula. It is simply a profound data-backed understanding of the specific environments where your individual analytical strengths are most aligned. It is essential to remember that journaling is strictly an educational tool, not a predictive model. It does not guarantee specific future outcomes or ensure capital preservation, and past performance is not a reliable indicator of future market results. The financial markets are incredibly vast and dynamic ecosystems, subject to countless variables. The purpose of our documentation is not to control the market, but to deeply understand our own response to it. Ultimately, prioritizing the documentation and regular review of the self-generated data empowers independent analysis, transforming inconsistent market observations into a cohesive, organized learning experience. By viewing historical data through a natural, educational lens, observers can refine their analytical frameworks and navigate the vast ecosystem of global finance with enhanced clarity, factual awareness, and a commitment to lifelong learning. Thank you for joining me on this deep dive into the art and science of progress tracking. I hope this discussion has inspired you to view your market observations through a highly structured, objective lens. Before we sign off today, I would love to hear your thoughts and insights on this topic. When you think about documenting your own market journey, what specific emotional metric or market condition do you think would be the most valuable for you to track, and why? Please share your thoughts and perspectives in the comment section below. I always enjoy reading about your unique approaches to continuous learning. If you found this educational episode helpful, feel free to like, subscribe, follow, and share it with the others on their trading education journey. As a final reminder, trading financial products involves significant capital risk. 76% of retail investor accounts lose money when trading CFDs with IUX Market Ltd. Please ensure you fully understand the risk associated with leverage and margin requirements before engaging in financial markets. Keep observing, stay dedicated to your data, and I look forward to exploring more concepts with you in the next episode. Thank you for listening. Goodbye.
You've been listening to Trade-a-Live with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.